you are building a business, you want to set up the foundation the right way, especially if you are a soul-led, conscious entrepreneur. It is vital to set up your business structure according to the rules of this realm. Hi, my name is Ariel, and I am a former CFO, and I used to own an accounting firm. I've worked with hundreds of business owners across every industry, and the most common question I get is, how do I set up my business? I now help conscious entrepreneurs set up aligned, profitable, scalable businesses, and it all starts here. So in this video, I'm going to explain to you how to legally and financially set up your business for success. These are the basic steps. Step number 1 is to choose your business name. You want your business name to be scalable. So not necessarily for the offer that you're working on just right now, but something that you're going to be able to use long term. So once you have that business name and it feels aligned to your authentic self and to your mission, you're going to want to look up to see if anybody else has used your business name before you start setting your business in motion. So you can check with the IRS and with your state to make sure that your business name is available, and I will get to that step later in this video. But the first thing is to come up with your business name. The next thing that you need to do is choose a business structure. Now, this can look a little bit complicated in the United States. Before we get started, there's a couple terms that you need to know that I'm going to be spouting off during this video. So we have income. Gross income means income that comes in the door on the top. It's what your customers pay to you. There's no expenses included in gross income. Net income is your gross income minus your business expenses equals net income. Net income is also your profit. It's the same thing. Now, on your tax return, you're also going to have additional deductible expenses. These might be related to assets and other things. It totally depends on your business and what you have, but there may be other deductible expenses. And so we take our gross income minus our expenses equals our net income or our profit, minus tax deductions equals our taxable income. Taxable income is the number that you're going to pay taxes on. So for a sole proprietor, this is our first business structure. This is when you are the business. It's just you as an entity doing business. And sole proprietors file one tax return. It's your normal 1040 tax return. You just include a Schedule C that shows your gross income minus expenses minus tax deductions equals your taxable income. This all is on your Schedule C inside of your 1040 tax return. And what happens in this scenario is that taxable income is subject to both income tax and self-employment tax. Income tax, you can go look at the tax brackets. It just depends where you fall into the tax brackets. You might pay 12% or 20% or 22% on that taxable income number, depending on what the number is and what this year's tax brackets are. You will also pay 15.3% self-employment tax. Self-employment tax is Medicare and Social Security. Half of it is technically part of those deductions included in the calculation, so you get to write off half of it. But the bottom line is that you end up paying roughly 20 to 30% tax as a sole proprietor getting started normally. It could be more, it could be less. Sole proprietors also do not have any legal shield with their business. So if a customer sues you or something goes awry or someone steals something from you, it's you. It's your assets that are involved in that legal scenario. Whatever's in your bank account, whatever assets you own, like your home and your car. There's no shield between you and a legal situation. Now, a sole proprietorship is the easiest for operations. It's pretty light and easy on the bookkeeping and the requirements from the state and the government on how you keep track of things and how you operate your business. It's the most simple. The next business structure type is a partnership. So basically a partnership is exactly the same as a sole proprietor. It is taxed the same and it has the same legal, like no shield. unless it's an LLC. So by default, if two people start a business and they don't form an LLC, it's considered a partnership. The only difference between a partnership and a sole proprietorship is that there is an additional tax return. Basically, the partners file a 1065 tax return, and depending on the percent of ownership, whether it's 50-50 or 20-80, that taxable net income moves over to your personal tax returns, and you pay the same income tax wherever you are in the bracket based on your whole totality of your personal 1040 return, and you pay the self-employment tax on your percentage of the partnership. So it's exactly the same, it's just two people involved. Partnerships can get messy really fast, even if it's a husband and wife. So I strongly recommend forming an LLC if you are doing a partnership. So moving into LLCs. LLCs are taxed the same as a sole proprietorship and a partnership. Shocking. You even only file one tax return unless you have multiple people involved. So if it's a partnership, you're going to file that 1065. But if it's just you and you're creating an LLC, it actually still goes on the Schedule C inside of your 1040 tax return. And you are taxed the same way. There's no tax benefit of being an LLC. The benefit of being an LLC is the legal shield. So basically, when you create an LLC, it becomes a separate entity, a separate being. There's you, and then there's the business, the LLC. And it essentially gets its own social security number. It's like its own whole being. Now, this is vital if you are working with people that you could accidentally hurt. So massage, doctors, dentists, any professional service that involves the law, like lawyers and accountants. Anytime you're working with a customer where something they could fall and hurt themselves, or the service you're offering hurts their body in some way and they could sue you, this is where the LLC is super important because it creates a legal shield. And as long as you don't pierce the corporate veil, which I'm going to talk about later, if you get sued in an LLC, the person suing you only has access to the assets sitting inside of your LLC. So your LLC's bank account and anything that it owns. But you and your personal bank account and your home and your car and whatever things you own, your retirement accounts, those are all protected. So that is the main benefit of an LLC. An LLC can also elect to be an S-Corp. Now, this is an IRS status that you elect for tax purposes. And it has a huge savings in taxes. So if you're planning to make $50,000 profit consistently or more, setting up an LLC and electing the S-Corp is a great option. And I'm going to explain that more in just a few minutes. So the next business structure is a corporation. And in the United States, we have two types of corporation, a C-Corp and an S-Corp. The S-Corp is that same S election that I'm going to talk about in just a minute. C corporations, or just a corporation, is the one that's double taxed. And basically what happens is you as the owner are set up on payroll. You receive a salary just like if you were working for a business. And you have income on your corporate tax return, which is a separate tax return. You have income minus expenses, minus your salary, minus the taxes paid on your salary, which includes Social Security and Medicare for the employer, equals the business net profit minus whatever other deductions it has on the tax return. That taxable income on your corporation is subject to corporate tax. And then any dividends you take out of that net profit, you can leave it there or you can distribute them. Those dividends are taxable. So that's where the double taxation happens. Now, this corporate structure is really good when you have a lot of investors or a large business. If you plan to have a corporation and you don't want to be double taxed, you can elect as an S-Corp. And I'm going to talk about that in just a second. So a corporation has the best legal shield. It is the most protective. It is a full-on separate being with a separate tax return. And as long as you don't pierce the corporate veil, it's very protected. The complication with having a corporation is that you need to have a board of directors that has regular meetings that makes decisions. Now, the board of directors can be you, and you can be the only person on payroll. You don't have to have other people involved, but there do need to be annual meeting minutes, and there's certain requirements that are legal and accounting for record keeping that just make having a corporation more expensive. and more time consuming. Okay, so the S election can be done for both an LLC and a C corporation. The S election is a tax status with the IRS, and it basically changes the way you're taxed. So in an S election for both types, LLC and corporation, you put yourself on a salary and you'll have your gross income minus your operating expenses, minus your salary, minus the employer share of the payroll tax, the Medicare, Social Security, state disability, all that stuff, equals your net income. And the tax advantage here is that, let's say your S-Corp is making $100,000 in the door. You set your salary at $50,000 and you pay income tax, Medicare, and Social Security on that $50,000. And then let's say your net profit at the bottom is $20,000. That $20,000 is only subject to income tax. You avoid the 15.3% self-employment tax. So that is the major advantage. If you are making $100,000 or more, this is the setup for you. And if you're planning to make that, but you're not making it yet, it's nice to maybe set up an LLC, run the LLC for a couple years. As your income grows, you can always make the S election. You just need to make it at the beginning of the year. You really can't backdate it. And so just keep that in mind when you're looking forward at your goals and how your business is doing. You can easily file the form yourself. It's a single page form that you send to the IRS, or you can hire an accountant to do that for you. Now with an S-Corp, you are still required to do annual meeting minutes. This is a fairly simple process. You can look up how to do it on Google or hire a lawyer to help you. The bottom line here is that an LLC is a really nice starting point for most entrepreneurs because it gives you the legal protection, and when you can do that S-Corp election, then you get the tax savings. The last type of business structure that I want to cover is a nonprofit. A nonprofit is basically mission driven. You are the steward of the mission. It is not for your profit. Now, nonprofits are set up very similarly to a corporation. You just have to fit into one of the categories and apply for the 501c3 or whichever tax exemption status with the IRS. So you would still set up a corporation. You need a board of directors. You put yourself on a salary. And then that net profit that's left over each year after you pay your salary and all your expenses, that doesn't go to you and it doesn't get taxed by anybody. It stays in the nonprofit to be reinvested in future activities. So nonprofits are a little bit more strict and a little bit more expensive to manage. You really want to hire a lawyer and an accountant to help you in the process. But it's a wonderful avenue for people building conscious businesses and bringing new ideas to earth. Okay, so step 3, you have your business name, you have your business structure, and the third step is to register. So I like to first check with the state that the business name is available before doing the IRS registration, but I actually like to register with the IRS first. So what you can do is go into Google search and type in business name search plus your state's name. And there'll be a search option usually on your Secretary of State's website. Look up your business name idea and see if it's available. Now, multiple people can have the same business name. It just has to be a little bit different iteration. LLC on the end or any little change is fine. So once you check and make sure that your name is available with your state, you're then going to go to irs.gov and get your EIN number. So you have to be careful because if you Google IRS EIN, there's a whole bunch of ads that'll charge you money to get your EIN number, which you can do, but you can also totally do this yourself. Just make sure that you're on the website irs.gov. You're going to choose the EIN application and just move through the application and fill it out, and you should be able to print a PDF with your EIN number at the end. The EIN number for your business is basically a social security number for your business as its own entity. And if you're a sole proprietor, you don't have to do this step at all, but you can, because sometimes people are asking like for your business ID number and you might not want to hand out your social security number. So instead you can provide the EIN. But if you'd like to skip the EIN number for a sole proprietorship, you can totally skip this step entirely and just set up with the state. So then step 2 is to set up with your state. You need to register with the Secretary of State. Every business has to pay tax on their income to their state. The tax that you pay in your state is different for every state, but most states require a general excise tax, which is on gross income off the top. They don't care about most expenses. There's some deductions for like out-of-state income and different specific activities, but for the most part, you're paying on gross income. And then also usually there's retail sales tax, depends on the state. And it depends on your business activity. So you're gonna go to your state's Secretary of State website and fill out a business application. For a sole proprietorship or a partnership, it's fairly simple. If you're an LLC, you're gonna need your articles of organization included. Some states allow you to just fill that out within the form. Some require an attached document. You can create these online yourself. You can go to LegalZoom.com and have one created for you, or you can use your regular attorney. If you're a corporation or a nonprofit, you're gonna need your articles of incorporation and your board of directors' name and contact information. You'll also have to pay a fee with the state, whereas the IRS EIN is free. The state's registration fee is different for every state. Some it's like a couple $100, some it's like $25. So the last step, now that you have your business name, your business structure, your EIN number from the IRS, and your state registration, they're also going to provide you with a number. The 5th step is the most important step. You're going to set up a bank account for your business for all business structure types, especially sole proprietors, but corporations are required to have a business bank account. So for all of the business structures that have legal protection, LLC, all the corporation types and nonprofits, you have to have a separate bank account, and you cannot mix personal money with business money. If you do, it's called piercing the corporate veil, and you will lose all your personal assets if you get into a lawsuit. So instead, you're going to set up a business bank account. You're going to put all of your income from your customers into that bank account. You're going to push all of your expenses out of that bank account. And any money that's left over, or any money that's in there that you need personally, you can transfer to your personal bank account at any time. The only restricted structures for doing that are a C corporation and a nonprofit. You cannot just move money out of those without it running through a payroll system. The payroll system that I recommend is gusto.com. So for all business types, you're going to set up your bank account. For sole proprietors, partnerships, LLCs, and S-Corps, you can just transfer money when you need it. So a customer pays you $5,000. You want that $5,000 in your personal account, put it into your business account and go ahead and transfer it, or write yourself a check to your personal account. This is called an owner draw, and it's posted against equity, which is balanced against that net income profit for the year. Also, having a business bank account makes your bookkeeping so much easier because everything is in one place. You can use a system like QuickBooks Online. You can use a bookkeeper to help you organize this. Or at the end of the year, you can just export all of your transaction data into a .csv file, which is openable in Excel or Google Sheets. And then you can organize your income and expenses into categories for that year to do your taxes. So it's a really clean way to keep everything in one place, and you don't have to worry about where your expenses are and what happened throughout the year. So these steps are essential, but it's really just the beginning of setting up your business. If you want to set up your business in an aligned, profitable, and energetically clean way, I teach all of this and more in my Business Mastery course, which is launching in July. From choosing your business model to your offers and what tech to use, this is all in the course as your roadmap. You can check the link below to join, and let's build your business right from the start. Bye, guys.